I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher. And if you look at the performance of Bitcoin over rolling 3, 5, 7-year periods, it is the top performing asset. And overall those periods, since its inception, it's the top performing asset out there. So institutions cannot dismiss it. You could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market.
Cathie Wood, the founder and CEO of ARK Invest, is highly confident, over 95% certain, that a Bitcoin exchange-traded fund will emerge in 2024. ARK Invest has partnered with 21 Shares, a prominent financial technology company, to introduce a range of innovative crypto-based ETFs. The initial offerings include spot Bitcoin and Ethereum ETFs, currently awaiting approval from the U.S. Securities and Exchange Commission. Cathie's positive outlook stems from her extensive engagement with institutional investors, and she anticipates a transformative impact on the cryptocurrency landscape upon the approval of a spot Bitcoin ETF. Expressing a likelihood of over 95%, Cathie expects the SEC's approval by January 10, 2024. In a recent interview, she also envisions institutional investors entering the market in substantial numbers, with their initial investments gradually increasing over time. Cathie believes that this influx of institutional funds, potentially around $1.5 trillion, could flow into Bitcoin and other digital assets, marking a pivotal moment in the next era of cryptocurrency adoption. In a joint perspective with Alia Snyder, co-founder of 21 Shares, Cathie underscores the revolutionary nature of this development, projecting it to be a monumental moment that will propel Bitcoin into a new phase of widespread cryptocurrency adoption. Both leaders anticipate unprecedented growth and transformative changes in the crypto industry within the next few years.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Partnership started we didn't know it at the time, but in 2018, when I first met Ophelia at an ETF confab happened to be Rome, Italy. And we sat next to each other serendipitously and started talking. And I realized that Ophelia and Hanny, her co-founder, had within 1 year, because they started, I guess it was 2019. It was 1 year. They had created a platform that everyone will need to create if they want to launch a spot Bitcoin and other kinds of crypto ETFs and ETPs. So their infrastructure was in place. They had great research, especially on the research side of the firm. But I was thinking about how passionate Ophelia was about plumbing and wires and all the things that go into creating an infrastructure to make things happen. And I said, I must introduce her to Tom, our COO at the time, now president and COO, Tom Stout, because they speak the same language. It's not exactly my language. They're both passionate about it. And we, ARK, need to learn this because we would like to do more in the crypto world. As it turns out, we felt that they had built such a strong platform. And interestingly, 21 Shares is the largest pure play crypto ETP provider in the world with roughly $2 billion in assets today. But they built that platform way back then. And, it's very robust. And combining that with our research and our client service, which our Resolute has been with us every step of the way. Very few firms in our industry have a client service, either department or partner, who has come along with them in the crypto world, Bitcoin in particular. Our distribution partner has had to learn Bitcoin. And so we felt that, that those three legs of this platform, infrastructure, research, and client service, were going to make for a winning combination. And that's how we got together and why we got together. I often have to say, after I've said the plumbing is very complicated, I usually have Ophelia with me to explain why is it complicated? What are some of the complications? So that people really do understand doing this for 5 years and launching 40 funds through thick and thin, up markets, down markets, crisis markets. You've held up, weathered the storm, and battle tested the infrastructure. Whereas a BlackRock and Invesco and all of the big traditional firms have not had that experience.
While the stringent regulatory landscape remains a primary obstacle for institutional investors venturing into crypto within the United States, another significant barrier is the inadequate infrastructure. In a recent interview, Alia emphasizes the pivotal role of infrastructure in attracting affluent institutional investors. Illustrating this point with a personal anecdote about teaching someone to use MetaMask after years of effort, Alia underscores the evident need for enhanced and user-friendly cryptocurrency infrastructure that appeals to individuals of all ages and backgrounds. Alia contends that crypto-related ETFs are poised to address this gap effectively, serving as a bridge between the cryptocurrency realm and wealthy traditional institutional investors. She envisions these ETFs playing a crucial role in reshaping crypto to seamlessly integrate with the existing financial infrastructure. Alia believes that by doing so, they will incentivize major asset managers and pension funds to allocate significant resources. Cathie Wood also delves into the topic of institutional allocation post-approval, expressing optimism about the substantial growth she anticipates in this sector. The interview provides further insights into these perspectives.
I think there's been an anticipatory move that there is an appetite. So that's one reason the price has been quite firm here. And so I will say when a spot Bitcoin ETF is approved, because I think the probability is, well, we think it's 95% now, if not higher. I know that the cash versus in-kind, create and redeem, is an issue here, but and we can talk about that later. But I think a couple of things happened, especially something 5 years ago in 2018. Cambridge Associates, which is a consultant to institutions, endowments, foundations, and so forth, wrote a paper about Bitcoin and said to the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system, but recognize that the correlation of risk and return between Bitcoin and all of these other assets is very low. So what we probably have here is a new asset class. And what institutions do know is that the best way to increase returns per unit of risk is to diversify into a new asset class. So this is very important. And so Cambridge back then said, you may not like it, and you may really believe all these people who are saying these horrible things about it, but this is the way it's behaving. And our study, and we've put this study out, we're updating it now, on what should be the institutional allocation in a broad-based portfolio to Bitcoin. If you want to, this is as of last year, we're about to publish new numbers, but as of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That we believe is what is going to happen here. And I think the fact that we and others are educating institutions that, wait a minute, this is mathematically metered to go up to 21 million units, and we're at roughly 19.5 million. The scarcity value is already showing itself. And with institutions starting to push in, that will be ever more true. So might we get a sell on the news? Well, sure, we've had a nice little burst here, and there's just the hedge funds trade on anything, on any news. So you could have a bit of a sell off, but we think that the institutional demand is going to take this new asset class much higher in terms of market value.
Cathie and Alia caution that while the influx of money may initially be gradual, even a modest trickle would have a profound impact on the cryptocurrency industry. Alia clarifies that even a fractional allocation, measured in basis points, would be significant for an industry unaccustomed to such massive and instantaneous liquidity injections. She notes the unprecedented scale of numbers involved, emphasizing that crypto has yet to comprehend the magnitude of dealing with figures featuring an additional 3 zeros. This, according to Alia, poses a challenge for the industry to grasp fully. Reflecting on Cathie's interview and her projections for the cryptocurrency industry in 2024, your thoughts and observations are welcomed in the comments section below. Please share your insights on the potential implications of institutional money entering the crypto space and how the industry may navigate this transformative shift. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.